Okay, guys, we've learned about our T accounts. We've learned our debit and credit parts of them. We've learned which side is the normal balance side. So now we're going to use them to analyze some transactions that could happen. So before a transaction is recorded in the business or in the general journal, the information is analyzed and determined what is going to be debited and what is going to be credited. So usually you're going to have a chart of accounts, and if you look on page 3 in the textbooks, there will be an example of what a chart of account looks like. A chart of accounts is a list of accounts used by a business, and we've talked about some accounts already. We've talked about our cash account, our supplies account. We've talked about our accounts receivable accounts, our accounts payables, our capital. A chart of accounts is just going to list all of those for you, so that way you know what accounts you should be using when you have your transactions. So some questions you have to ask yourself when you have a transaction before you start actually recording it is what accounts are going to be affected. And as we get started here, it will just be 2 accounts. It can be more than that, but we'll get into that as we go. How is each account classified? How is each classification changed? And how is each amount entered into the account? So we will use our T accounts to help us figure out which account is going to be debited and which account is going to be credited. So we can start with this transaction here. So on August 1st, we received cash from the owner as an investment, $5,000. So we have to figure out what 2 accounts are going to be affected here, and then which one is going to be debited and which one is going to be credited. So in this case, if we are receiving cash from the owner as an investment, we know from what we did last chapter that our cash account is going to be used and will increase, and then our capital account is also going to be used and increase. So we'll look at it like this. Our cash account over here is an asset. Assets have a normal balance on the debit side, so the increasing side is the normal balance side. So we would debit cash the $5,000 because cash is increasing. Our Kim Park capital account has a normal balance on the credit side. The capital account is also increasing, so we would want to put that on the normal balance side, which is the credit side for a capital account. One thing you will notice here is that our debits must always equal our credits. So if we debit one account, we're going to have to credit another, okay? Because our debits must equal our credits. So in the case of Kim Park investing $5,000 into the business, we would debit cash for $5,000 and we would credit Kim Park Capital for $5,000. On August 3rd, we paid cash for supplies, $275. Okay, so the 2 accounts that we're going to need to use here are going to be cash and supplies. Both of them are assets. So if we paid cash for supplies, our cash account is going to decrease, and our supplies account is going to increase because the balance of our supplies is going to increase. So that would look something like this. Over here on our cash account, because our cash is decreasing, we want to put that on the credit side, not the normal balance side, because the cash is decreasing. So this credit side for an asset is the decreasing side. So it will go on the credit side. For supplies, which is also an asset, our supplies balance is increasing. So we would put that on the normal balance side or the increasing side for supplies. So we would credit cash $275 and we would debit supplies $275. On August 4th, we paid cash for insurance, $1,200. So the 2 accounts here that we would need to use are cash and insurance. So if we're paying cash, our cash is going to decrease, and our insurance, our prepaid insurance account is going to increase. So that would look something like this. So our cash, because it is decreasing, oops, that should be a little minus sign right there. You actually don't need plus and minuses on this. I'm just using them to help you as we get started here. You just have to put the actual amount on the debit or the credit side. So cash is decreasing $1,200, and this should be a minus sign here. So we're going to put that on the credit side because the credit side for an asset is the decreasing side. And then our prepaid insurance is also an asset, and that's increasing. So we're going to put that on the normal balance side, which is our increasing side. Transaction 4, bought supplies on account from Supply Depot, $500, okay? So in this case, we'll be using our supplies account because our supplies balance will be increasing. And then we will also be using our accounts payable Supply Depot account because the balance of our accounts payable Supply Depot is also increasing. We're going to have to pay them money later. So over here, supplies, which is an asset, we are going to put that on the debit side, which is the normal balance side, because our balance of our supplies is increasing. And then our accounts payable Supply Depot, accounts payable is a liability account. Liability accounts have a normal balance on the credit side. So the amount that we owe Supply Depot is increasing, so we want it to go on an increasing side. So that is $500 on the credit side. And then again, notice that debits equal credits here. We debited supplies for $500, we credited accounts payable Supply Depot for $500. On August 11th, we paid cash on account to Supply Depot. So we're making a payment to Supply Depot because we owe them money. So we're going to be using cash and accounts payable Supply Depot as our two accounts. So if we're paying cash, cash decreases because we're getting rid of some of our money. So we will have a $300 on the credit side of cash. We are also decreasing the amount that we owe Supply Depot. So the decreasing side for accounts payable Supply Depot is the debit side. So we will debit $300 to accounts payable Supply Depot. And you'll notice that our debits equal our credits here. So we credited cash $300, debited accounts payable Supply Depot for $300. Okay, make sure you tune into the next video so we can do our work together.